Welcome back to the channel, everyone. My name's Mark Littler. I'm the owner and editor-in-chief at the Whisky Wash, and I also run Mark Littler Limited and several other whiskey-related businesses. Now, we have talked a lot about the whiskey market on this channel. That's primarily my focus, looking at investment, collecting bottles rather than just necessarily drinking them. And right now, the market is literally in a mess. Look, the London City Police are executing search warrants on companies in London, I'm assuming relating to fraud in the sale of casks. You've got the bottle market in a dire state. Prices have kind of fallen from their peaks in 2022 all the way back down to 2021 levels. So we've pretty much lost all of the gains from 2021, from 2024. And you know what? It's almost impossible to flip bottles anymore. You can't go out there and buy a bottle at release. Pretty much anything you can't go out and buy and release and flip anymore. And you know what? I could not be happier. This has been a long time coming, people. This correction is very much overdue, and it is needed in order to bring this market back to some health and back to some normality. Now, there are a few different reasons that have caused the market to be in a mess. And let's take a look at some of the reasons. Now, I think one of the key ones is that the market was driven mostly by greed and or the greater fool theory. Again, look back through our channel history. We've done loads of videos on these things. But when you look at bottles like the Folio 1 that was released at £199 and went up to over £15,000 at its peak, and even though it was only released in 2015, why did that go up so much? There was nothing there to underpin the value of that bottle. It's a no-age statement Macallan, not made in a particularly limited release, just people got greedy. People were very probably pumping the market and bidding up these prices at auction in order to put their bottles in, and it was a very bull market. So people, no matter who we sort of said, be careful, people just went out there and were buying and flipping these bottles in a monumental way. So yeah, the market was driven by greed. There was nothing fundamental propping up the whiskey's value, and people were just buying things because they saw the price going up and have now ran away. So it was driven by greed. Greed is not something good to build a market on. Sure, a little bit of greed, everybody wants a profit, but the vast amounts of greed that brought in lots of people was partly to blame. Now, if you look at this as well, like, it's not the whiskey's fault. Let's look at the market in a little bit of a wider context. So if you think that it is only the whiskey market that is suffering at the moment, you are massively wrong. Look at Sotheby's, for instance. Sotheby's have just laid off dozens of staff in London because of how soft the art market's going. It's not just them. Look at the watch markets. The watch markets have been softening in a very, very similar way to the whiskey markets. And what I find fascinating about this is that a lot of the whiskies that were growing so much in value were bottles that were not particularly rare, but people understood it was quite easy to understand them. And what do I mean by this? They were basically bottles that were relatively new at retail, say within the last 5 years, or at least since 2015. And they were pretty much flashy and or built directly for whiskey collectors and flippers and investors to get hold of. And there's quite a lot of echoes in there with the whiskey market, with the watch market, I beg your pardon. You know, when you look at what was driving the growth in the watch market, it wasn't all the old and vintage and rare watches from the 1970s, 80s and 90s. A lot of it was on the Madden Batmans, the Hulks, the Starbucks, you know, all of the modern releases. Rainbow Dial Daytona, anybody? How can a Submariner from 2018 have been selling for more than like the vintage watches from the 1970s and 80s, etc. The market was just imbalanced. You know, you had more focus on the modern side of things than the old side of things. And of course, there was lots of other financial reasons that were driving those things. And again, look, it's not just watches as well. It's the diamond market as well. Like, the diamond markets have suffered incredibly. Now, I think what you can look at this then, if we look at our next point, is what has happened here? What caused this buying and what's caused this slowdown? Interest rates, people. Right now, we have got the highest interest rates that we've seen in this country for probably over 20 years. Someone's going to correct me in the comments there, but it's definitely, it's a very, very long time. These are the very highest interest rates that we've ever seen. Now that causes several things in the market. So before the interest rates grew incredibly, where could you put your money and make a return? You certainly couldn't make it in the banks. You know, there was almost no interest to be had in banks. Likewise, the equities markets were doing okay, but not fantastic, you know, compared to today. Look at the equities markets in 2024. The equities markets are back up and running, people. It's much easier to put your money into equities now than it has been over the past decade or so. So when people were looking as ways to make money with their money, they were looking at alternative investments. And of course, whiskey was one of these great alternative investments, as was wine. Now, as that money has disappeared with the increase of interest rates, that lower end of the market, let's say up to say a couple of grand, those people have probably had a squeeze on their mortgage or squeeze on their car repayment or squeeze on their credit card payment, you know, and that's caused a big contraction out of the lower end of the market. So the lower end of the market is no longer buying. Now you look at the wealthy end of the market, you know, the very high net worth people who don't care about how much money they've got, they've literally got that much of it. Well, you know what? They don't need alternatives. They can go and put their money in cash. Literally, cash will earn you 5 or 6%. Super simple, super easy. Likewise, they can go and put their money back into the equities markets and get money that they, you know, and get returns that they've never seen for a long time. So that's kind of caused this squeeze on both ends of the market. The lower end of the market has suffered because it's lost all of the people that were sort of like following the herd and propping up the volume of trades. And then the higher volume bottles, those sorts of people are like, well, you know what? I'll take it or leave it for a couple of months. Maybe I'll just come out of the market for a year. I'm earning 6% in cash. All the other markets, whiskey, watches, diamonds, whatever, all down. So yeah, let's just sort of play it safe for a bit. So those interest rates, and right now we're at the zenith. We're right up here. Inflation's come down, but interest rates haven't started falling yet. So let's see what happens when the interest rates begin to fall and see what effect that has on the market. Now, of course, another reason to be happy, and I've kind of mentioned this already, is everybody knew a market correction was overdue. Look at the growth, look at the trajectory of these markets. The whiskey market was like this from 2021 all the way to 2022, and now it's kind of done this, and we're at the bottom of the pyramid. So this is 2021, this is 2022, and this is 2024. We've gone up artificially and we've come back down. And you know what? The median curve, like the line of best fit, actually fits and goes pretty well into that line of 2021 to 2024. Now, that sort of growth that we saw wasn't sustainable. If that was sustainable, we'd be seeing like way out of screen up here growth by 2026. It just was never sustainable, people. So the market correction is good. It's brought prices back into line and it's brought more opportunities back, which again will hopefully drive a bit more growth in the market. And again, another thing here, there were too many cask investment companies coming to light. Like the ASA brought in regulations recently, last year, to try and govern this market in the sense that they were given reasons that they can't, things that they can and can't say in their advertisings and on their websites. And you know what? No one's listened. Have a look at your Facebook ads, have a look at these websites. They're all full of return on investment figures and it's all just nonsense. But as I mentioned at the start of the video, London City Police are now involved investigating a company. They executed a search warrant at this London company's address. And they've not arrested anybody yet, but you assume there's no smoke without fire. Now, what's interesting here is that there are some legitimate cask investment companies out there, and cask investment is still a legitimate way to put your money if you do it right. So I'm going to stop this video right now and you will find more details on how to safely purchase casks of whiskey in another video. So yes, in summary, the market is, how do you put this politely? It has seen better days, but the reasons for this growth were never sustainable, people. This is just a natural market correction and it's showing a real maturity of the market as well. So don't panic. don't offload all your bottles, just hold tight and let everybody else sell theirs, and then you'll come back later. Anyway, keep subscribed, keep liking these videos, and head over to the Whisky Wash if you want any news, reviews, new releases and stories, etc.